Welcome to Safe Money Strategies with Susan Moore-Vault, president of Moore Financial Strategies. Susan specializes in working with those over the age of 50 and is now in her 20th year as a financial services professional in Tucson. None of Susan's clients has ever lost a dime in this market. Susan is an Air Force veteran, a former detective, a mother, and a grandmother. Susan's mantra is get educated about your options so you can make informed decisions. And now, here's your host, Susan Moore-Vault.
Protecting all you have. More financial strategies.
Good morning, Tucson. This is Susan Moore-Vault. As always, thanking you so much for spending this time with me on Saturday morning. Just getting past these rains and seeing all the nice new growth. I'm telling you, my yard, my garden looks like something tropical. I love it. But I won't miss the humidity when it's finally gone. It's good for the desert. And those sunsets, wow. Aren't they absolutely spectacular when the colors of the clouds are changing like a constantly changing palette? Nobody does it like God. Amen? Anyhow, thank you very much for being with me. My mantra is get educated on your options so you can make informed decisions. What makes me different from all those other brokers, advisors, and everybody else out there? Well, I'm a retirement specialist. I work exclusively with pre- and post-retirees, and my emphasis is on ensuring your precious retirement dollars don't get lost, don't end up getting beat up by the market. You know, at this time in your life, you really can't afford to take those kind of hits. Remember what it was like in 2008? Ugh. Oh, let's face it, folks. There are so many things that we can't control. Let's work on the things that we can control. And by the way, whoever you're working with, please check them out. Moore Financial Strategies has an A+ accreditation with the Tucson Better Business Bureau. We have no complaints in over 21 years. Can your current broker or advisor say the same thing? If not, why not? Our prime directive is to always keep your money safe and always keep your money growing. Let me ask you this. In your last review with your current advisor, did he or she disclose all the fees that you're paying? Does he or she have a solid plan in place to protect you when the market crashes again? And believe me, it's not a question of if, but when. It will be happening. As you know, if you're a regular listener or one of my beloved clients, I always say that nobody's ever lost money in an annuity. And there's a great article that was the August Market Trends by Jack Marion, as president of Advantage Compendium, providing research and consulting services to select financial companies. He's twice been asked to address the National Association of Insurance Commissioners on annuity issues. His insights on the annuity and retirement income world have appeared in hundreds of publications, including Business Week, Kiplinger, Wall Street Journal, and more. So, his article is 4-0. No losses for FIA, fixed index annuity customers. Despite carrier struggles, index annuity owners always win. On May 8, 2012, Shenandoah Life Insurance exited Virginia State receivership and became a subsidiary of the Prosperity Life Insurance Group. Shenandoah entered receivership in February of 2009. What this means is Shenandoah will return to normal operations and fulfill all of its commitments to policyholders. What this also means is it's still true that no index annuity owner has ever lost a dime because their carrier failed. The news release for Shenandoah Life says it's a rare thing for an insurance company to successfully exit receivership, but within the index annuity world, a successful rebirth is the usual outcome. This also happened with Standard Life Insurance Company. They went into state control in December of 2008, and in 2010, it was announced by the insurance commissioner that they'd reached an agreement and that all of the obligations would be assumed by Guggenheim Life Insurance Annuity Company. So the owners received the full value of their annuities. And it's the same with Western United Life Assurance and General American Life. Since inception of the index annuity industry in 1995, 4 index annuity carriers have entered receivership, and 4 carriers have emerged through the other side. This is a relatively rare feat. More often, the annuity assets are simply purchased by another insurer and the old carrier dissolved. 4P clearly shows that the current state regulatory system works, and it allows the bragging rights mentioned earlier, which is that no index annuity owner has lost principal because the carrier failed. It also points out the 2 big differences between banks and carriers. When FDIC takes over a failed bank, another healthy bank is usually found that will handle the deposits and account balances covered by the FDIC insurance. If a bank isn't found to take over the account, checks are immediately mailed out to bank customers payable up to the limits of the FDIC coverage. By contrast, when an annuity or carrier enters receivership, withdrawals are usually halted except in cases of extreme hardship. Yes, all the index customers, annuity customers, were eventually able to access their cash value, but they might have to wait up to 3 years to achieve it. Although FDIC-covered accounts are immediately available, balances over the limits uninsured mean the customer is treated as a creditor. These additional amounts are paid out as assets of the failed bank or sold, and there's no guarantee the customer is ever made whole. So once again, the state insurance regulatory system has shown it works well in protecting policyholders, even if the carrier fails, and why annuity agents can show that fixed annuities are a safe money place. That's why I'm so proud to make these types of products available to my clients. I don't have to worry about going to bed at night and worrying about the market and did I let a client down? I never have to be afraid to look into a client's eyes and their face and say, oh, I'm really happy I did this for you. And to have them say to me, thank you, Susan, we didn't lose any money. So we're up against a break, but please don't go away. We'll be right back.
More financial strategies.
If you've missed any portion of today's show or you'd like to hear it again, simply go to www.790knst.com. Click on the On Demand tab and in the drop-down menu, select Podcasts to go to this weekend's show or Safe Money Strategies. You can also always listen to the show streaming live at 790knst.com. Thanks for listening. This is Safe Money Strategies.
Have you had enough of the market gyrations yet? Is a double-dip recession here or near? Hi, it's Glenn Beck, and I want to tell you about Susan Moore Vault at Moore Financial Strategies. If you're over 50 and you're concerned about your nest egg, you need to see Susan. She's been serving Tucson now for about 20 years, and she's never lost one dime of her clients' money. Excuse me? True. For IRA and 401k rollovers, Susan can eliminate your risk and ensure that your money is safe no matter what the market does. She can show you how to guarantee the safety and growth of your money for the rest of your life. Do your own homework with Susan and carefully decide how to manage your money. Do you want to bet on the market, or could your portfolio use some diversification to ensure some stable income no matter what happens on Wall Street? Talk to a true retirement specialist. The only one in Tucson that I've agreed to endorse is Susan Moore Vault. Call Susan now at 296-4464. That's 296-4464.
More financial strategies.
Okay, we're back. Now I'm going to talk about one of my favorite subjects, Social Security. Folks, this is so important, and I can't emphasize enough, before you make the decision or shortly after you've made the decision, do your homework. Has your advisor explained to you all the options with Social Security? Have they told them strategies that will affect you for the rest of your life? Have they discussed these incredibly life-changing decisions with you? If not, come and see me. I'm somebody that plans for retirement. I help you make sure that you have what you need and that you know what your options are. A lot of other advisors out there are simply doing investments. They're not planning, and it can make such a difference. And the best time to start planning for Social Security is between the ages of 60 and 62, before you file. At that point, your primary insurance amount calculated by Social Security will be fairly accurate. That's the amount that you would get when you start. So that's the time when you want to decide, when you want to know your options and figure out when to claim Social Security. And that's when you want to decide if it makes sense to keep working longer. And you need to develop a plan for drawing income at retirement, how much you're going to take from, pension or 401k, when to start Social Security, how to budget. You need to plan your own longevity and that of your surviving spouse. So if you do live a long, healthy life, Lord willing, that you have enough money for the rest of your life. You need to prepare for the coming change in health insurance when Medicare kicks in at 65, and what else is going to happen? We should know by the end of the year, hopefully. But if you're already 62, you need to know the best age for you to start to claim benefits and understand spousal strategies such as file and suspend and claim now, claim more later strategies. Let me explain. File and suspend is what higher earning spouses do when the lower earning spouse will be claiming the spousal benefit. For example, if you have a husband and wife, both age 66, entitled to benefits of $2,500 and $1,500 respectively, the husband files and suspends. In other words, he delays his benefits until age 70, when his benefit will be $3,300 monthly. However, by doing that filing, the wife can collect 50% spousal benefit based on her husband's benefit at his full retirement age of 66. She would receive one half of $2,500 or $1,250 a month from her age 66 to 70, at which time she switches to her own benefit, which has grown to almost $2,000 a month. So doesn't that make sense, folks? I mean, if you can have that additional income, but still wait until age 70 to max out, doesn't that make sense? Because the amount that you'll get from 66 to 70 is 8% more a year. Did you hear that? From 66 to 70, it's 8% more a year. The other thing, filing a restricted application, or as we call it, claim now, claim more later, is what the higher earning spouse does when that spouse will be claiming the spousal benefit. For example, if a 66-year-old husband decides to delay his benefits to age 70, but his wife started taking her benefits at age 64, then the husband is entitled to 50% of his wife's benefit while he waits because she has already filed. The husband tells Social Security that he wants to restrict his benefits to his wife's record. He can change his mind at any time and switch to his own benefits, or he can wait to his full retirement age at 70. Think of how much extra money that will mean for those years. I mean, you really need to think about that. By taking advantage of spousal benefits and delaying your own benefit, you provide higher income now and for your lifetime. Waiting until full retirement age offers the most flexibility for claiming spousal benefits and earning delayed credits. If you're over 62 and you've already started your benefits, you need to understand that you'll never be able to take advantage of spousal benefits unless you applied less than 12 months ago, at which point you can withdraw your application and repay the benefits. However, there's one more option. You can suspend your benefit at full retirement age, which for the baby boomers is 66, and then let it grow. You'll get that 8% annual delayed credit applied to, it's a lower amount than if you had let it grow, but it's still better than sticking with that lower benefit for life. So there are some options. And if your advisor isn't telling you about these, then come in and see me. I'm not going to charge you anything. I'll spend some time with you. We have some calculators that can help you and your spouse get a better idea of what your options are. That's what I always say. Get educated on your options so you can make informed decisions. You can't go back after you've been in the system for a year or more. So take advantage of it while you can and at least do your homework. Know your options.